So there's three topping moves. Similarly, on the bottoming moves, we get a couple of different patterns that recur quite frequently. One is that we end up with a very low bar, volume bar here. This is a low churn bar, followed by a high churn bar, and then the move starts off with some acceleration and a climax bar to start with. So if I show you that, that's the low churn bar, which is actually the low of the market there. So basically, the market tried to move lower and was met by no additional selling. There was no additional volume. There was kind of quite a large spike down in terms of range, and there was no additional selling. We end up with a low churn bar. The market then tries to move higher, and these high churn bars mean that the buyers are absorbing any additional selling that comes into a market, and then there's a high range and high volume bar, the climax bars, and that's the beginning of that uptrend, and that kind of pushes the market higher. If I go to the next low on this pattern here, what we're seeing here is a combination of a low churn bar followed by a low volume bar, and then another low churn bar, and then the beginning of the move with climax. So there we have the low churn bar there, which is low volume, high range. So we've spiked lower, but there haven't been any additional sellers join in. We then have a very low volume bar, again no sellers there, and then another spike bar down, again quite high range but very low volume, and then the market takes off with a climax bar. So we've got high volume and high range, and the market takes off. And then the last type of pattern, a low pattern that you see frequently, is a lot of churn volume, and here we have green bars followed by green, green, and then the market takes off with two high climax bars, and again those green bars are happening here. And what usually happens is that's churning volume at the bottom of the downtrend, where we're basically absorbing any new sellers that come into the market, and it usually takes several bars, high churn bars at the bottom of that move to turn the move around. And then we know that the next trend, or not a great large trend in terms of this example, but the next move up is started by large volume and large range, and we kind of have the climax bar kicking off that move upwards. So those are three tops, three bottoms, and I was going to show you some continuation moves, and I've just highlighted here. This is a continuation move in the middle of a downtrend, and what we see is we have a climax bar here. We have a high churn bar prior to it, which is kind of a stopping move there, and then a high climax bar moved into here, showing essentially that's short covering that's happening during that activity there, an increase in volume and range, and then it immediately kind of gives way to a new low being printed. On the flip side, this is a continuation pattern that happens in the middle of an uptrend, where we get, here's a low churn bar there on that low, and so we're kind of spiking lower, but there are no additional sellers coming into the market, and so the market decides to turn around and rally the other way. So again, we tend to see these low churn bars frequently in the middle of uptrends, and they're a continuation pattern. So I hope that helps. That was my better volume indicator, and just by making some very simple additions to a traditional volume histogram, you can get a lot more information out of what is happening at various stages of a move here. Now, if you go to the website emini-watch.com, that's emini-watch.com, and if you go to the free stuff section, that better volume indicator, the code for that is given away for free, so that's free on the website. So I encourage you to go and download that. As I said, it does work in all time frames, all different markets. I find it particularly useful in tick bars, particularly kind of day trading high volume stocks like high volume contracts like the E-mini. Good luck with your trading.